Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. You guys already know, hit that like, subscribe, and notification bell. And I'm just going to get straight to the point on this one, but make sure that you check out the top link below. Make sure you check out the top link below. Learn how to earn, okay? Learn how to earn. So let's get into it. We also see that this market is, also too, please don't fall for spam. We've been doing a lot of cleaning. If they say they're me, they're not me. Never send money, crypto, or your personal information to anyone, whether it's here or in the Discord. Okay, so we've been you guys, if you're not in the Discord, those guys are killing it with their plays. We made a little money today, got in, got out. Let's just look at what's going on in the market right now. As we can see, bloodbath. The bulls are just tearing the place up. They're just wreaking havoc. The Dow is down 252. The Nasdaq and the S&P are now in correction territory. Correction territory. We are in correction territory. I'm going to talk about a few things. Look at this. S&P 500 and the Nasdaq fall into correction territory. Let's go and see what's going on right here. We can see this U.S. stocks fell Thursday, which is today afternoon, under the pressure of disappointing third quarter results from big tech companies and high treasury yields. High treasury yields are wreaking havoc on this economy. Okay, we can see the Dow fell, everything fell, but we are into what's known as correction territory. So we had some more news that came out today, and it was GDP, gross domestic product. It actually grew 4.9%. All right. Annual pace in the third quarter better than expected. Right. So I know you guys are going to ask, well, why is it doing what it's doing? So here we go. Gross domestic product, a measure of goods and services, right, produced in the U.S., rose. Remember that for those of you that are new. This is gross domestic product, right? Rose 4.9% annualized pace in the third quarter, ahead of the 4.7% estimated, all right? So this is what we expected, but this is what we got, right? So now, why is the market reacting negative, right? The Fed wants to see the Fed doesn't really want to see this, right? It all goes back to the Fed. Is the market too strong? And it all translates down to, do you and I have too much money in our pockets, if you really want to get real with it? Do we have too much money in our pockets? Because if we got too much money in our pockets and the economy is doing well, then we'll go to the store and spend, right? And the more we spend, the more suppliers, or should I say goods and services, get to raise their prices because of demand, right? Demand makes prices go up. And then that means that further puts gasoline on inflation, and the Fed is trying to get inflation under control. That's why the Fed is actually looking for job numbers to actually cool off, right? And so now we have this question: will he raise one more time and be done, or is he already done? So gross domestic product is showing that our economy is still resilient. The economy is still resilient. Okay, so you know what? Let's listen to this for a minute.
Hey, Steve, just to add to that, the U.S. jobless claims number up 10,000 to 210K. The week before, the October 14th week, jobless claims revised to 200K. Any quick thoughts on that?
Again, it's not ticking up. Apparently, I think we went through this one time. Those who are on strike do not get jobless claims, but if other factories were laid off because of that, or the company laid off workers, that would be those would be people who would be eligible for jobless claims. I am getting a little more data here. Consumer spending, 4%. The price index, ex-food, energy, and housing was plus 1.8%. So that's about half of what it was the prior quarter. So that's good news right there on inflation. And again, I do not seem to see the business spending number, but that's something I'm going to be looking for. One other thing, the ECB this morning came out at 8:15, kind of signaled, I guess you could read it as something of an extended hold in policy. What they said in their statement is that the current level of rates should help them make progress towards their goal of bringing down inflation to their target. They hadn't used that language before. It suggests that they may be on hold for a bit of the ECB, which has up until this meeting hiked 10 times in a row, Joe.
So you heard Steve Leisman there. That was, of course, this morning. The numbers are really, really hot. And so people are trying to find out what exactly is going on, right? This market is absolutely cooling off. Here's my concern. We know by the time you get this, guys, Amazon will be out with its report. And big tech has been reporting even when the numbers are good, which they haven't been great. They've just been good. Even when the numbers are good, they actually sell off like Meta did yesterday after closing bell. Slight pump up and then it cools off, right? And then we have a correction in the S&P and the NASDAQ. That's a sign that things are not that hot. Things are not going good. To me, that's a sign that the bears are getting stronger. And then we're in correction territory. And in the S&P, we're at an inflection point that we really need to start looking at long-term positions, right? Long-term positions and what we should buy. As I said on yesterday, let's take a look at Tesla right quick. As I said on yesterday, I sold my Tesla, not my DCA, not my $5 a day, but I had bought a chunk of Tesla and I said, TSLA, that it was going to cool off. And I said it was going to, it looks like it's coming down to the 190-ish, okay? And so, of course, it actually came down even more today, as we could see. Right now, it's at 205. And we're right at closing bell as I'm recording this. So it is 3 o'clock on the head. Let me refresh. I wasn't going to make a video today, but this is news that you guys need to know. All right. So sometimes I just want to say sometimes when you're in a play, especially for those of you that are doing options, if you're just into the plays and you're just looking at your analytics, your technical, you really need to bag up sometimes and see what's going on in the overall market, see what's happening in the macro market, right? And see what is driving the technicals. Because you remember your technicals are about 80%, right? So you want to see, okay, I didn't know that this was going on. I didn't know that with GDP. I didn't know that, we were in correction territory. If you know these things, it'll help you understand your positions in your options, okay? So just want to put that out there. But long term, let's go back to Tesla. Long term, as you could see, I did a good job by selling it because my entry, if you saw my video yesterday, was around 212. So I just sold it. I could get back in and be, have it in at a lower rate. But when it comes to Tesla, I'm going to continue to be patient. It still looks like a falling knife to me. And I'm going to let it continue to fall. It's what I'm going to do. Leave me a comment on what you're going to do and what you see. Now, I'm going to spare you. I have a gentleman here. Let me see if this plays.
That we put in the 44.
Here's a gentleman that is talking a bit. He's talking bullish. All right. You know what? I'm going to play just a few minutes of this. I want you guys to check this out.
Our next guest has a year-end price target on the S&P, which is currently at 4159. His year-end price target in just about 2 months' time, 4,900, highest on the street. To continue our contrarian week, John Stoltzfus joins us now. He's chief investment strategist at Oppenheimer Asset Management. John, welcome. Did you mean to find yourself in this position?
Kelly, when we raised our target from 4,400 back in at the beginning of August, at that point, it meant 4,900 was about 6 to 7% upside to the end of the year. And right now.
So I'm not going to bore you with the whole thing. You could check him out. Just Google it. You'll see his name there. You'll see this Power Lunch is on CNBC, right? Just go and watch it. He's going to explain why he thinks we're going to end higher. And the reason why I'm playing this is so I could play the advocate, right? And I played a video, I believe it was yesterday or day before yesterday, of someone that was very bearish on the market, saying that we not only are going to end lower, but we literally are probably going to go into a recession Q4. That's what he says, not me. That's what he said. That's why I reported that on yesterday. But today, this gentleman is expecting a nice pop at the end of the year. And the truth be told, no one knows. I don't know. You don't know. Technical analysts don't know. We just don't know. So what I do is I play the market that I'm in, right? So I just wanted to break all of this news to you. For those of you that did not know why the market was down, let's see where it closed. And this is the why. The why was because of the data that we had out. We are in correction territory on the S&P and the NASDAQ. And so that's something to pay attention to. And of course, there's a lot of scared people now. When you go into the correction, people don't know how far that's going to go. So they take their money out, causing the market to further drop. And then we had strong GDP. And now we don't know what the Fed is going to do. Is he going to start, lifting weights again, pumping iron? Like, is he going to like, okay, I gotta cut some more, right? And so that's what we're looking at. I'm going to just leave it right there. Hey, I just want to say we only have a few days left. So make sure you take advantage of the 16 free stock by clicking the third link below. That will be Moo. Okay. Depending on your deposit amount, you get a free, both deposits amount, you get a free share of SoFi. All right. So make sure that you partake of that and get it funded before the weekend. Okay. I'm going to leave it right there. You guys let me know, like we said, talking heads on both sides. One say we're heading to a recession. The other says we're going to be higher in the S&P at the end of the year. So you let me know what you're doing as a preparation. Me, I'm keeping some dry powder, but I'm literally playing the market that I'm in. Right? Leave me a comment. Check out the links below. We'll see you tomorrow. Live, love, laugh, and learn.